As of the making of this video, the stock market has been down more than 30%. What should you do right now? Now, a lot of investors, what they'll do is that they are going to panic sell. Should you buy or should you look to sell? Now, it depends. If you realize that you're holding stocks that wouldn't last long, then it's better to cut your losses and move on. If you are holding a stock that is fundamentally good, then it is better to close your eyes and then wait for the markets to recover. Now, here's the thing. If you are an investor of the index, okay, and look at what happened after every crash. You see the markets dropped during the dot-com crisis and then it recovered. Markets dropped again during 2008 financial crisis. And look at where it bounced off from. Right, if I draw these two lines over here and where it bounced off from the top, you realize that the 2008 financial crisis, it tested this resistance and then it came down, crashed, and then it bounced off from the critical support level. Okay, if I extend this line right here, and you can see clearly. And every time the market drops like this, people are going to panic, they are going to panic sell. But every single time when people panic sell and they don't know what they are doing, the markets always recover in the long term. From here onwards, you don't know what's going to happen, okay? The markets might continue to drop until 40% or 50%. Or it might recover from here and then go up. Nobody would know, okay? Nobody would know. But now that markets have dropped 30%, instead of selling off and panicking, just like most other people, you can gradually add to your positions as the market drop, okay? I'm not telling you to go all in right now. I'm telling you that when markets drop by 30%, 40%, 50%, sooner or later, this is a clue that tells you that the markets are going to recover. Of course, it's going to drop further, yes, but the probability of the markets going up in the long term is in your favor. Then some people ask, Karen, how can you take advantage of the markets tanking, okay? If it does further tank, if you do options, what you can do is that you can buy put options to take advantage of the short-term downfall of the markets. But if you're like Warren Buffett style, you can gradually do dollar cost averaging. But of course, I understand that you cannot compare 2008 financial crisis with the market drop right now because it is caused by different reasons. So if you look compare the past epidemics, so for example, SARS, back in 2002 and 2003. If you look at the MSCI market index, it increased by a total of 21.51% during a 6-month period after the end of the period. So basically you can see MSCI drop all the way until April. Along the way there are a couple of other epidemics that come along like the H5N1 and then dengue fever in 2006. Along the way there are a lot of epidemics, right? Every single time when the market drops in the long term, yet again the world index would increase. And when you are looking at the S&P 500, same thing happened. When SARS was an epidemic from 2002 to 2003, right after that entire period, the S&P 500 increased by 14.59%. Then on the 12-month period, it increased by 20.76%. So of course, take the recent few epidemics, Zika virus and also measles. Again, you see markets recovering, and you realize that aside from HIV and AIDS, most of the epidemics that you see, when it ends, it causes the S&P 500 to recover. So the thing is, not only index are tanking, but also individual stocks, for example, cyclical companies like airline companies, travel companies, cruise lines, companies that are in the travel industry, luxury industry. Then a lot of people ask, Karen, is it good time to buy all these companies? Now, the thing about cyclical companies is that some of them would go bankrupt. Especially when the government don't bail them out, they are going to go bankrupt because most of them have very high debt levels, they have high capital expenditure. I wouldn't recommend you to look into airline industries unless you know what you're doing, because even Warren Buffett, he is holding airline companies inside his portfolio right now. So yes, some companies might go bankrupt. That's why you need a good portfolio, a good balanced portfolio. Don't put all your money into that one stock. You gotta have a mixture of cyclical stocks, defensive stocks, so that when one of the stocks tank, the other stocks that increases in price is going to cover up your losses. Okay, so some of the more defensive stocks that you can look into is, for example, McDonald's. McDonald's right now, it tanked about 30+%. But defensive stocks, they are known to survive during recessions during a financial crisis. So if you were to compare airline companies as compared to defensive stocks like McDonald's, which one is a safer investment to get into? Definitely defensive stocks. But with that said, if you're a more aggressive investor, then you can get into the cyclical stocks. For example, bank stocks like JP Morgan. And this is also one of the companies that Warren Buffett has invested in. The price also tanked from a high of $141 to now about $83.50. Other cyclical stocks, real estate companies, automotive companies, and also the oil and gas sector. So basically my point here is this: if you want to sell, you sell only when your stocks became crappy stocks. You know that they wouldn't last the recession. If your company is good fundamentally, it's just a matter of time as to when the price is going to reverse and you're going to go from losses to profit. Now, if you want me to talk into detail about airline companies, about banks, oil and gas companies, about defensive stocks or cyclical stocks, let me know down in the comment section below. And also, if you want a video on what currencies to sell, what currencies to buy during this recession, let me know also, and I'll try to make a video on that. If you don't know how to pick individual stocks, I've done a video in the past. You can go and check it out. I put it somewhere on top of the screen. So with that, I'll talk to you in the next video. Bye.